And then I showed you a potential bearish pattern on gold's chart, the triple top formation. Now, just
welcome to Gold Silver Pros.
Hey everybody, this is Rob Kientz, your host with 𝘠𝙀𝙾𝙊𝙀.com. Our slogan, of course, is keep on stacking, and that's we're going to recommend what you guys do as you get into the gold and silver market. We have a really great set of charts for you today. I'm going to do a technical analysis, and this is a follow-up from last week when I posed a question on Twitter and on our show. Is gold setting up for a fall despite very high physical demand? And I talked to you last week about how that physical demand manifested. And then I showed you a potential bearish pattern on gold's chart, the triple top formation. Now, just because a triple top forms doesn't mean it's bearish, and that triple top formation has not completed. So I thought I would bring back some additional charting to see where this could go to the bullish side. Now, you can look at gold's current situation is typically bearish because during the summer it typically does get bearish, but I think we may have a reversal this summer, and that's what I wanted to bring to you. Let's go ahead and get started with the presentation. Of course, I'm going to have a couple of messages for you right up here at the beginning. I love to do memes, or I love to read memes in the creative way that people come up with. And this is something a lot of us can agree with, regardless if you're gold or not, or crypto or whatever you are, or you're just getting into this and you have no idea. You know, like, tell me about all this financial stuff. A great meme here: work hard to earn money, put it in the bank owns every penny. The reason I threw that meme up there is because the law written around bank accounts, even a lot of brokerage accounts, is such that they're beneficial trusts in a way. An easy way to describe it, where the bank owns your money, it invests your money, it's considered an asset on their books, and you have a relationship where they need to manage it on your behalf. Now, you can get your cash in and out, but essentially they loan whatever cash is not being, which stays in the bank essentially, which a lot of people leave a certain amount of their deposits in the bank. They take that and they invest it, and then they got to keep a certain amount of reserves in case people want to redeem. They're putting your money in higher risk investments, and that's what happened to banks earlier this year. A lot of those investments, the high risk investments, are actually treasury bonds. Those yields rose, the value of those treasury bonds fell, depositors panic and pulled their money out. So you have to be aware of that if you're in the banking system. And if you're new to figuring out what's going on, you know, totally understood, this is a good channel for you. Just as an anecdote before we get into the gold analysis, I attend a lot of different groups locally as well to kind of gauge where people are in finance and kind of pitch in, but also to learn from other people. So I go to a lot of meetings and networking and things like that. I went to one this weekend, and it's really an outgrowth of a philosophical group that talked about a lot of cultural and political changes. And they started talking a bit of finance, and it's mostly 20s and 30s, some things in there. Occasionally, you know, some older people will kind of wander in. And they were starting to talk about these things. They were starting to talk about the charts that we talk about, Fred and all that, you know, and yield curve inversions and labor and all that kind of stuff. And they're starting to get into it. And it's great to see that awareness in that age group. I think it's very positive. All right, without further ado, we're going to get in. This program is sponsored by Rockridge Resources. They're our watch list copper gold play for this year. It's the only one I'm watching at the current moment. There will be others as I get back into this. The reason I'm talking about mining stocks again now is because we're getting into that season where the mining stock indices are starting to bubble up a little bit with the popularity of gold and silver. So if you're interested in getting information on the stock market end of gold, precious metals, gold and silver, polymetallic assets like Rockridge has here, we'll definitely be talking about that. And we put the disclaimer up: we do not offer financial legal advice, but this is just a stock that I put on my watch list and we like. Rockridge Resources trades on the Toronto Stock Exchange Venture under the symbol ROC. You can get it in the OTCQB, which just is a form of market here in the United States. And you can also get it, I believe, in Frankfurt. They have it under symbol RR0. So you can get it in most of the major stock markets around the world where you will see the commodity resource stocks. I want to talk about their Knife Lake project, and just very simple. One of the main reasons I like this stock is it has two big projects: Knife Lake, which is a polymetallic copper gold with some other things in it as well. And then they have Rainy, which is pure gold. I'm just going to talk about Knife Lake here for a moment. The thing I like real quick is this is in an area, the Greenstone Belt, that has Timmins and Kirkland Lake and all these other projects. They're in the right zone in Canada here. This Greenstone Belt is where a lot of resources have been mined, including the precious metal, gold and silver. They're on it. They're over the target. And that's why I really like them. And their market cap is so low. There is so much room. Their $5 million market cap for having Knife Lake project and Rainy Gold project. if they even get close to being taken out by someone because they're developing these properties, this is going to go way, 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 way up. Now, this is speculative investment, but I really love Rockridge Resources. I like their projects and I wanted to mention them. Okay, without further ado, let's get into the pattern on gold. That's what you guys are here for. This is a variation of the chart I showed last week when I talked about, well, we have a triple top and it's a shorter term chart. And I was talking about these three tops here in the gold price. Now, triple tops and technical patterns don't always hold. Anybody that follows Elliott wave analysis will tell you that. There are plenty of times I've looked at Elliott wave and it breaks down. And there are plenty of times we looked at other types of technical analysis and it doesn't hold because humans will do various things. But there is a lot of pattern in trading. There's a lot of math to it. There's Fibonacci's and things. There are patterns here. And that's what I learned when I was getting all my licenses years ago, which I no longer have, thank God. But when I was learning all this stuff, we learned a lot on technical analysis. I used to do technical charts on Forex. I used to do technical charts on stocks many, many times. And so I'm very familiar with it. So yes, we do have this triple top formation that typically is seen as bearish. Why? Because if you're hitting a trend line 3 times and you don't go through to the upside, that means momentum is fading and typically this will fall down. And we've had the beginning of that move. You can see here on the chart, we've had a little bit of retracement. Now, not much. It's still sitting pretty close to all-time highs, or maybe about $100 or so off of the previous all-time high in gold, which we saw during the pandemic, because gold and silver spiked because everybody's worried about the economy shutting down. And what do people do when there's a panic? They go to gold and silver. They go to their safe haven assets. So in any case, triple top forms here. Looks like it could be bearish, a little bit of declining volume. That's another. But 2 technical indicators I pointed out last week indicated that the market was actually oversold on a technical level. And I mean just the paper, not the physical. So when we look at this chart, we're looking at futures. You can see here, this is a futures contract on COMEX. This is where spot prices are determined. This has nothing necessarily to do with physical trade. Physical trade is only one input that these traders use to trade the futures, but there are many more. So the physical trade does not drive the price, although it definitely can affect the price at certain times. And we've talked about that, and we'll explore that more in a different video. But for purposes of this chart, I really wanted to look at it and describe what's going on technically, because that has to do with spot price. So if you're out buying at your local coin dealer, or ordering from one of our affiliates, or ordering online at one of the shops, or you're selling stuff on eBay, it helps to know what the prices are. And this is how we determine them, or this is how the market determines them, rather. So yes, we have the triple top, and on a shorter term chart that looks a little bit bearish. But if you look at a longer term chart, obviously you can see with a series of higher lows dating back to basically 2000, we've been in a bull market in gold and silver for 23 years. Now, we did have a nice little pullback from 2011 to 2016. That was a big consolidation phase, and you could see gold launch after that for the next couple of years to reach an all-time high of, depending on what chart you look at, it touched on 2070, 2074, but most people are calling it about 2060. That was really firm closing at 2060. So in that range, so it reached a new all-time high after the pandemic, and then it challenged it again after the bank failures. And the banks didn't really go all the way out. The FDIC and government stepped in to guarantee depositors. Now, they let the shareholders and the bondholders twist in the wind on some of these banks, but they did make the shareholders sound. And I think they did that because they're trying to protect the dollar and the central banking system, and they can't have a run on the banks right now. So they guaranteed the depositors and let our bails take their losses. But that staved it off. And so gold kind of got up to here and it said, yeah, we're at the trend line, but it looks like the banking failures are okay. Let's kind of pull back for a little bit. So this little pullback is just post-bank failure euphoria that we think we're out of the woods. But are we really? I think most traders know that we're not. That's why you have elevated bond yields in the short term, anywhere from a couple of months up to a couple of years. You have high rates on U.S. Treasuries because people think that there's near term a lot of risk, and so they're going to demand a lot of return when the government issues those bonds, because they're looking at the economy going, yeah, we don't quite see this big recovery here. And then they look at their real world with inflation and lack of jobs, especially with the younger kids, the millennials and the Gen Zers, and it's really tough out there. And I think the real economy is telling us there's no reason to be super bearish on gold at the moment. I don't think there is. But we have good news, ladies and gentlemen, because I went a little deeper on the chart. This is at the suggestion of one of my followers and something I was going to point out anyway. I kind of want to play Dr. Jekyll and Mr. Hyde here, because when you look at charting, you have to be really careful what information that you're pulling out of it. Here, if we look at a longer term chart, you have this bullish higher lows and mostly higher highs with a little bit of consolidation for 5 years in the middle, which, given how much gold had risen, the financial problems we have having this consolidation, to me, was not a big issue. You can see where it wasn't a big issue when we had really high volume leading up to the 2020 high during the pandemic. And then again, to earlier this year after the bank failures. And again, we tested it again, was at 2022. So gold has been very frothy. It continues to bump up against these highs. And we have a very bullish pattern. Now, if you look at the previous rise in gold, when it was 2000 to about 2011, when you had the financial crisis, first you had the tech crisis 2000, the financial crisis 2008, 2009 with Lehman, if everybody remembers that. Gold hit its new all-time high of 1900 back down in 2011, about 2.5, 3 years after, the Lehman event really started, because it takes that long for people to pile in gold and then decide it's okay, right? And that's why this little short-term bearish move now after the bank failures, I don't see as being anything lasting, because gold will tend to get bid up after bank failures for a while. That's a positive momentum. But you look at the technical pattern, it's an open wedge to the upside, and then it came back down because it was too frothy. This is a much higher slope on the highs than it is on the lows. And what that means is some of the people who are skeptical on gold said it rose too high and it needs to come back. And you saw what happened. It rose too high, needed to come back. Here's all the QE printing era. This is when the government is printing money and putting out easy, cheap debt. So people forget about the problems in the world. Why? Because they're able to finance their companies. People are living high on the hog. It's almost free money. Think about interest rates near zero. People can refinance their houses. They can get loans for anything. Money's easy. Why do you need gold? So gold falls back down. It had gotten a little too frothy. Okay. We had solved, quote unquote, the issues of the last financial crisis, but we haven't. Why? Because we're back in the same damn place. Hence the bank failures, hence this rising gold in 2023. We just kicked the can down the road. I think people that follow this know that. And talking about the millennials and the Gen Zers that I was with this weekend on that call, they're starting to figure this out too. They're figuring out that even though some of the data in the economy is rosy, they're not actually seeing that manifest in their lives in terms of real opportunity. And I think that's why gold is going to continue to rise, because we just kicked the can down the road and we didn't solve the problem since 2008. And the millennials and Gen Zers are seeing it. Now, we're all seeing it. We're all affected, but especially millennials and Gen Zers. It's gotten really hard for them. In any case, here's the next bullish pattern. We had a nice run up, but we didn't have a big pullback. You see on the run up here, a bunch of higher highs, we had a nice pullback and consolidation period. We didn't have that this time. We went up, and then our higher lows, our bottom trend line went higher. And we have a little bit of rise in this triple top. And this is why I ultimately don't think it's bearish. This is you can see the triangle closing here. You can see the wedge closing. When you have a wedge closing and it's pointed up, usually that means you got a big upside breakout coming from a technical perspective. Well, that's what we have on the chart. If you look at it, we have a rising wedge after a previous huge bull run for 5 or 6 years. Then you have a rising wedge consolidating. What's going to happen? All the momentum is actually up, not down. Now, short term, there's going to be a fade. Why? Because we're getting into summer. Summer is typically the slowest time for gold and silver. It wasn't in 2020 during the pandemic. So during crises, those rules go out the window. And what I'm arguing for is that I think we're still in a crisis. That's why gold is not falling substantially. It's retraced about $100 or so. It's not falling substantially. And the chart shows that it's in a bullish pattern when you look at the longer term history. And that's why I did this, is I wanted to show you the triple top and say this could be bearish for the summer a little bit. But what I said in my JM Bullion article and what I said in my video last week was I still think it's going to go up, because if you look at the longer term chart, technically it still looks bullish and the fundamentals are screaming bullishness, and nobody knows that better than millennials and Gen Zers. And the reason I'm talking about millennials and Gen Zers, I'm trying to reach out to them. A lot of them are starting to discover what our generations have started to figure out already. The Gen Xers, my generation, and the baby boomers, is that tough times are a-coming. And we've lived a little bit longer life, so we've seen a few more recessions, so it's easier for us to talk about it. I think millennials and Gen Zers, especially Gen Zers, are just now figuring out life. They're just now internalizing it. And so I want to bring them on, because it's important that despite our generational differences, we can all talk about this in similar terms, because we're all going to have to come together to affect a solution here. I wanted to talk also about why I'm so bullish, because the physical is just going bunker nuts, man. Typically, COMEX in the US in 1974 was not set up as a delivery market. It was a hedging market, which turned into a speculative market, much like the stock market, where it's a lot of it's fugazi and it's not substantive. So we don't like, the price action on a short-term basis. But you can really tell how much gold, how popular gold and silver are by looking at the physical charts. Look at this run up to the pandemic of gold. Man, they loaded these warehouses with gold. Pandemic was going. People thought that gold was going to get popular, and sure as hell did. It got up to 40 million ounces and has fallen down to below 25. That is a huge decrease, over a 40% decrease in a couple of years of gold stocks on the COMEX for what is not typically a big delivery market has been shifted and turned into and metamorphosized by the market into delivery. Why? Because the market needs big delivery of gold that can only go through that market. You're not going to get 15 million ounces of gold coming out of APMEX and other retail outlets that fast, especially when it's the big players that want it. The reason it goes to COMEX is 1, big players, big pockets, 2, big deliveries. The big money has been in gold for 2 years. I do not see that as a contrarian indicator. I see that as a fabulously bullish indicator, because the parties that have money to do this don't screw around. They don't just randomly buy a couple ounces of gold. They're buying it for a reason. And when they put this much money behind it, it's for a reason. They want it. And that's why the stocks have been coming off. What about silver? Same thing in silver. Mostly I'm showing the gold charts today. Same thing in silver. Since silver squeeze, silver's come off. I always show you the ETF data, most of it is stored in London as well. I'm not going to show you on this video because we'll get on the weekly market wrap, but I really wanted to focus on the differences between the physical deliveries and what we see in the prices, and why I think physical deliveries are so powerful. They're going to start to pull this up. I think this rising wedge that you see here on the chart is the physical deliveries the last 2 years starting to convince the speculators maybe we need to go long gold. I don't think they're completely convinced yet, but the physical deliveries the last 2 years in gold have opened the eyes of the traders. And that's why during the summer, we still have a bullish wedge pattern in the gold market. People aren't giving up on gold yet. And so this may be one of those summers like 2020 was, where we actually have a rise or at least a holding steady of the gold price and not a fall that we typically have. Now, this fall over the summer is not just localized to gold and silver or the precious metals or even the commodity space. A lot of stocks this happens to too. A lot of other investments this happen to, because during the summer, what do people do? They vacation, they travel, they don't trade as much or as actively. They're not sitting on their screens going, I need to buy, this stock or this penny stock, or I need to invest in Tesla and Apple. They sideline a lot of that. I used to write for Seeking Alpha, and a lot of articles come out what to do in the summer when the markets are a little slow. What you do is you take some defensive positions and reposition. Everybody does that. But I think despite that, we're still going to have a little bit of a run up in gold in the summer, or the potential for it, or at least hold steady on the price, because the physical demand is so much, it's starting to affect the traders. And you can see it on the damn chart. And what I've said for years is once that physical gets so persistent that people do not let it go, it will convince the traders to go long. Now, that doesn't guarantee that on the end of August, beginning of September, as we approach the end of the natural date of summer, which I think is September 21st or 22nd, when you have the equinox. When we get closer to that, I think it's going to get more frothy, but I want to see what happens up until then. I think we may hold serve in gold during the summer, and it may surprise some people. As you look at the vault numbers just come off, here's London. Look at the fall of the physical gold and the fall of physical silver in London. Ladies and gentlemen, it's not just in the US. It's not just in London. I show on the weekly market wrap the Shanghai charts in China, and that happens all the time, where those charts essentially or over 70% of the gold traded, let's put it this way, over 70% of the trade on Shanghai is physically delivered. Now, the overall amount of trades has gone down in the last year in Shanghai, but the percentage of deliveries actually ticked up. So overall amount of gold moving on Shanghai is pretty high. Now, most of that stays in China. It either goes to refiners or it goes into stockpiles of individuals or the sovereign or national wealth fund, those types of places. But it's being pulled out of the market, much like it is in London and in the US. So I personally think that we're going to be super bullish on gold essentially during the summer. I'm going to continue to be bullish. I think it's good for gold and silver. I do think we can have some fade during the summer as we typically have, but I think the physical demand is starting to tell the market, hey, no, we're buying physical, and the big dudes are coming in. And as I start to kind of check on where people are, where they're, I do this a lot of ways. We do it with Twitter surveys and community surveys, and I get emails and I talk to people, other influencers. And as I go to these groups, in particular, the younger generations most affected by these financial calamities immediately, because immediately affecting them employment and wage growth and things like that, much more than it is older ones where we have more established careers. I think they're starting to wake up and talk about it. So I think we're going to start to have young people come into gold and silver again. And I think it's starting right now. I'm getting that sentiment. Now, they're not all bought into it. A lot of them go over to the cryptos or Bitcoin or invest in penny stocks or, whatever they're going to invest in, regular stock market. But a lot of them are starting to get skeptical of the big brokerage houses. A lot of them starting to get skeptical about the 401k accounts. A lot of them starting to get skeptical about crypto and what happened last year where crypto, suffered a little bit with gold and silver held serve. I still think crypto has some room to run in terms of the price chart. But I think that people are moving on from some other investments in gold and silver because gold and silver is gold especially is taking its place as the asset of last resort. And I think that's what we're seeing here. And I think this year is going to be different in terms of a gold price. And I'm not going to say we're going to get to 3,000 gold because I think we have to have the big financial calamities first to move the gold market like that, to move the traders like that. But we're starting to set up for a nice, healthy physical demand in the market, which I think is going to start manifesting in the charts. And so I don't think this summer is going to be quite the runoff in gold and silver that we've seen in past summers. So if you're looking to buy the dip, you might want to do it now. And we may have another one or two during the summer. We could even dip down another $100. I mean, I suppose, but it ain't staying there for long, even if it does go down. And I don't think that you're going to have as much time this summer to really accumulate a lot of precious metals, unless I'm just totally wrong on the physical demand and the waking up of some of the other generations and other investors that typically don't invest in gold. I'm starting to see that. And so I think we're going to have more people slowly pile into it. Also, that's the summary. Lastly, just as a reminder, our stock pick, the one that we like, of course, do your own research, consult your financial advisor, accountant, lawyer, all that stuff before you make any investments. This is not investment advice, but the one that we like is Rockridge Resources. 2 projects. Their market cap is only $5 million. They're undiscovered. We found them. We like them. They have optionality in 2 projects. They have not only gold, but they have copper and a lot of other base metals. Both of them are very well established districts. You can get them on 3 major stock exchanges, the Frankfurt, the TSXV, the Toronto Stock Exchange Venture up in Canada, and here in the US, OTCQB. I'm going to keep talking about them because I think they're good. I like them. They're completely undervalued for what they have. And the mining stocks are starting to come back. Why? We've been talking about gold price. What happens to mining stocks when gold price starts to defy its traditional patterns and starts to get really strong in the bull market? The mining stocks go ding. And so if you're going to get into mining stocks, whether it be Rockridge or anyone else, you want to maybe start thinking about your entry point now, because you don't want that HUI and GDX to really rocket and take off because gold's been really strong. And so if you're going to get in the leveraged end of the gold and silver market into the equities, if that's what you want to do, you may want to start thinking about that now, because once the gold and silver get going, those equities are going to go up faster. They're leverage investment. You're going to make more on those, and you want to get all of your gains. So you want to start thinking about your targets right now. I like Rockridge. That's what I'm talking about. All right, that's going to do it for today's presentation. Thank you so much, guys, for joining in. Wanted to give you what I think is going to be a nice story for gold this summer. If it does fade, it probably won't fade quite as much. And that's with no news, it'll still fade. But if there's any news whatsoever, gold's going to continue to run. And I think we're setting up for when we come back in the fall, a nice bull run in gold based upon the technical patterns. And that's what I wanted to talk about. Yes, we have a short-term bearish pattern in the triple top, although it has not completed. And I don't think it will complete. Gold won't go down 1,700 in summer, I don't think. But even if it does, that is short-term. When you look at the longer-term chart, massive, massive setup for a long-term bull formation. Don't be fooled by the summer. It happens every summer, the price fade. But again, given what I'm seeing in the market, I don't think we'll have as big of a price fade. So if you're looking to dollar cost average in, don't count on gold getting back down to 1,700 this summer. It could happen, but there are a lot of reasons why it won't happen. And if you're in silver investor, that's a good news, because silver is a little brother that follows gold. If gold sustains its pattern through to the fall, we could be setting up for a potentially monumental finish to the year in both gold and silver. Of course, what's going to drive that? The geopolitical news, the financial news, all that news, which tends to drive people into safe haven investments like gold and silver. Also, a little bit of weakness in the cryptos, given last year they faded a lot when gold and silver did well. The cryptos look more like a speculative investment, like the stock market. They could recover and go back into a bull market and take some of gold's run. Would not surprise me. But I think with the younger generations waking up to the value of good financial sense in gold and silver, I think gold and silver is going to reemerge and maybe take a little bit of the thunder from Bitcoin. But I do think both are going to do well. If we have major financial issues, both will do well. The cryptos will do well and gold, silver will do well. I'm partial gold, silver, but pick your poison there. All right, that's going to do it for today's presentation. Until next time, Rob Keents, Gold Silver Pros.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.